Hello, good evening and welcome to Prime Business. I am Pius Kojobaka and looking at our stories. The Asante Hini Otumfuo said to the second has urged the Bank of Ghana to take steps to reduce interest rates and make credit more accessible for businesses, saying high borrowing costs are stifling economic growth. Speaking after a courtesy visit to the central bank, Otumfuo said to the second noted that while interest rates have begun to decline, more needs to be done to turn monetary stability into real economic activity. Here's more.
During the visit, officials of the Bank of Ghana briefed the Asante Hini on ongoing efforts to stabilize the financial system and maintain price stability, while emphasizing support for sustainable economic growth. Speaking at the event, Otumfuo said to the second stressed that lowering borrowing costs is critical for small and medium-sized enterprises, which are key to job creation and industrial growth.
I noticed that interest rates too have begun coming down, but from past experience, we are going to find ways of accelerating the pace.
John,
let me be as blunt as I can. No amount of investment by government on its own can scratch the surface of what we need to give ourselves a sound economy.
John,
Nor can we expect in this era of international discord to rely on foreign investments of any significance. This moment calls for a massive push to stimulate domestic private investment in industry. That cannot happen with interest at their current cutthroat rate and level. The challenge I leave with your creative brains is to fashion how you move the economy from the crippling high interest regime to the level where it becomes a stimulant of business and wealth creation.
The governor of the Bank of Ghana, Dr. Johnson Isiama, also said sustained monetary policy introduced by the central bank has been a key driver of the sharp decline in inflation. According to Dr. Isiama, the improvement in price stability is the result of deliberate policy actions rather than chance.
inflation, which is the first one, it stood at 23.8% in December 2024. Inflation has fallen sharply since then. By October this year, it got to as low as 8%, and by November, it got to 6.3%. This morning, we woke up to the news that for December, that is the end of last year, inflation got down to 5.4%. Now, I must say that this trend reflected the broad-based disinflation process across both food and non-food items. Certainly, Nana, these have not happened by accident. It is the result of sustained monetary discipline that we brought on board, the improved food supply conditions that existed throughout 2025, and our prayer is that this continues, and of course, the closer coordination across key policy institutions.
Otumfuo said Tutu at the event also called for closer collaboration between the central bank, government, and private sector to ensure the monetary gains translate into real benefit for businesses and households across the country.
President John Mahama has disclosed plans to create more jobs while sustaining recent economic gains. This, he says, is aimed at sustaining the recent recovery. The president, during his New Year message, noted that the plan will aid expansion of critical sectors of the economy and create the needed jobs. But let's track President Mahama's economic performance 1 year on. Joining us via Zoom for us to have this economic conversation is a senior lecturer at the University of Ghana, who is also the executive director of CPS, Dr. Edu Uzusakodia. Thank you so much, sir, for making time to join us here on Prime Business. And it's 1 year already. Coincidentally, inflation ended 2025 at 5.4%, marking the 12th consecutive month of disinflation and signaling improving macroeconomic stability. But what would you say is your independent assessment of President Mahama's economic governance?
Well, it's important to also start the conversation from or with what he inherited. He inherited an economy that had restructured its debt. And again, I want to use this opportunity, as I always do, to, on behalf of Ghanaians, thank the bondholders who sacrificed and endured painful haircuts. It is for their sacrifice that we see what we see, because that paved the way for an IMF program. So he also inherited an IMF program which has started yielding results. And most often than not, you hear from the IMF staff that Ghana's economy is on the path of recovery. So we must also thank the IMF staff and IMF program and thank the previous government for staying the course, and also thank President Mahama and his team for continuing with what they inherited. Now, with respect to the IMF program, because the money was given to us in tranches, you would expect a full impact of the program getting to the tail end of the program, that is somewhere in 2026. That's why we are seeing very much, appreciated recovery in the year 2026. Something we can also credit the president with, maybe extend to the previous administration, is the harmony between the fiscal policy and the monetary policy. I think it's something commendable that the two policies sing the same song. I mean, whatever the fiscal is doing, the monetary is playing complementary role. Unlike when, the fiscal may misbehave for the monetary to bail them out. We have also seen President Mahama fulfill some of the campaign promises with regards to the economy. They campaigned on the abolishment of e-levy, betting tax, COVID-19 levy, and the 2025 and 2026 budgets have addressed these. What is outstanding is the capital investment, the fact that the government has not committed so much to capital expenditure. We hear contractors saying that they've not been paid. The year 2025, we've seen 27% reduction in what was budgeted for capital expenditure. The government budgeted around 32 billion, but they are doing some 23.4 billion, 28.8 billion. That's about 8.8 billion less than what they budgeted for. So we haven't seen much commitment to the capital expenditure. I think another thing that they campaigned on that they are yet to deliver is the 24-hour economy. They promised a 3-shift system, 1-3-3, 1 job, 3 shifts, 3 persons. Ghanaians were expecting the rollout of that program. It's not been materialized. As CPS, we have scrutinized the 287-page document. We did not see the roadmap of a shift system in that document. What we saw was economic transformation footprints. And so, the Secretariat is saying that the shift system will come after the economy has been transformed. And so that promise of creating jobs through the shift system has not been materialized. We must also say that President Mahama's administration, economically speaking, has enjoyed favorable external environments. We haven't seen any shock, we haven't seen any pandemic, we haven't seen any geopolitical tension that will raise crude oil prices. In fact, gold price hikes, cocoa price hikes, and a drop in crude oil prices have all cumulatively benefited the Ghanaian economy. To some extent, one would say the U.S. trade war with China, which has weakened the U.S. dollar, has also benefited Ghanaians, because when the dollar price goes down, investors shift to gold, and that has increased the gold price. So countries like Ghana, which are well endowed with gold, are benefiting. So for the external sector has been quite favorable. This is the first time in many years that you will see both external factors and domestic factors working together for our good at the same time.
That's right.
Is the reason you see a cedi appreciation of around 40% in like 30 to 40 years. We haven't seen this. Inflation is also very low at 5.3%, as we have heard from GSS. So a lot of good things has been. He can tout a lot of good things.
And that's fine. That even feeds into my next question, Dr. Udu Sakode, about how we are able to sustain this momentum going forward.
So the first on my list is the debt. It's for no reason that the IMF said Ghana had to deal with our debt before they give us a program. Because they realize that when your debt is unsustainable, no matter what you do, you will get yourself into a mess. So I'm particularly happy. That's why I always start by thanking the bondholders. Because when the previous government started the debt restructuring, the target was to hit 55% debt to GDP ratio by 2028. By 2028. But as we speak, in January 2025, it's around 45%. So about 10 percentage points lower than the target we set for ourselves in 2028. So it's good. So how do we make sure our debt is sustainable? Let's look at the three drivers of the public debt: the exchange rate, which is favorable to us; the fiscal deficit, which is the gap between revenue and expenditure, and that is where we must keep an eye on. Make sure we raise enough revenue and close the gap between revenue and expenditure, and also all budget borrowing, so that we don't borrow things that we have not budgeted for as a country. And so I also want to submit that in talking about sustainability of our debt, let's put a cap on the debt to GDP ratio, say maybe 40% or 50%, that as a country, we will not allow our debt to rise above 50% of GDP, no matter what.
All right.
And secondly, let's put a cap on the composition of the debt, be it domestic and external. We can learn from Nigeria. In Nigeria, they have put a cap on external debt at 30% and domestic debt at 70%. So let's control the debt, the borrowing. Let's raise enough revenue. Let's keep the harmony between the fiscal policy and the monetary policy. Let's keep, resourcing the social intervention programs, i.e., livelihood empowerment against poverty, capitation grant, school feeding program, etc., etc. If we're able to do this, and then government is able to roll out the 24-hour economy program, our economy, the macro gains that we have made, will be sustained for a long time, and we can build on it and transform the economy and create the needed job that we all crave for.
And I appreciate that. So for you believe these things ought to be done in order not to erode the gains. But are there potential threats to our economic indicators going forward? Are there?
So we will have to go back to history. What has been the threat to our economy? I mean, external factors, geopolitical tensions. When I say geopolitical tensions, I mean fights between two countries, which will disrupt supply chain and then increase commodity prices to our disadvantage. So we haven't seen that. I don't think we expect something like that anytime soon. The external environment has been very favorable, so not much risk from the external. Domestically, we also saw a risk to our economy in terms of the fiscal indiscipline. But from 2023 up to now, because we are under an IMF program, fiscal discipline has been restored. The rainfall, our dependence on rainfall is still significant, so that when the rain doesn't fall, we see maybe a shortage or a fall in the production of agricultural production. So to the extent that the rain will continue to fall, we saw rain in December. It's raining in December and January. So it means that we do not expect much risk over there. So in terms, and then we are not in an election year, so the risk during elections, the fiscal slippages are also not forthcoming. So I do not foresee much risk in the year 2026, except that we don't have to sleep. We don't have to. We have to keep our gas on and make sure that we are fiscally disciplined and borrow to invest prudently in the areas that can generate future income. One thing I've learned in public finance is that any expenditure that you incur, make sure that it generates future income. Whatever you are spending on, make sure it brings future income to you so that you can pay your debt.
Very well. Thank you so much, Dr. Edu Sakode. I'm grateful for having you on Prime Business speaking to us here. Now, Ghana's economy is projected to have expanded by 5.7%, plus or minus 0.5 percentage points in 2025. And this is higher than the International Monetary Fund's forecast of 4% real gross domestic product growth of 4.3% by the World Bank. More in this report. According to IC Research, a leading market research firm, festivities-related spending in Q4 of 2025 boosted household and private sector consumption, supporting trades, manufacturing, transport and information communication technology, while crops remain resilient. IC Research said it, however, expects construction growth to remain normalized below the double-digit expansion posted in the final quarter of 2024, although it sees prospects for recovery above the momentum in the third quarter of 2025. It continued that recovering household spending, driven by stable prices and a softer value-added tax regime in 2026, will support sales revenue and gross margin, highlighting effective distribution networks and efficient management of stock-keeping unit will retain customer base and structurally support top-line momentum. The report said the main investment thesis rests on capital growth than attractive income generation capacity. Ghana's overall real GDP grew by 5.5% year-on-year in the third quarter of 2025, easing from 7% last year. However, underlying activity remained firm, with non-oil growth at 6.8%. The Ghana Union of Traders Association, GUTA, and the Ghana Revenue Authority have engaged in a consultative meeting and agreed to establish a joint technical team comprising representatives of GUTA and GRA to be responsible for addressing sector-specific challenges, including requirement for the VAT record keeping, input VAT claims, and VAT validation. Clement Boateng is the president of GUTA and has been speaking to Joy Business.
Like a major, tax policy initiative like this, you should all know that definitely it will have some teething problems. And so when the implementation, started on the 1st of January, we had some challenges as to how, the new 20% should be applied. Because like you all know, most of our members were on the flat rate. And once that has been abolished and a new law has taken over with the charging of 20%, there was the need, to get a clear-cut direction of how the whole implementation is going to be. So then quickly as leaders, we had to engage a GRA and then let them know our grievances and challenges as far as the new law, is concerned, is going to be enforced. And so when we put our grievances to them, they also, receive it in good faith. And we had a very, cordial and mutual discussion. So at the end of it all, it was agreed that we should, set up that a technical committee, three members from GUTA and then 3 members from GRA. Whilst we still continue to impress on our members, to moving into the new rate, that is 20% and charge. So as we go on, if there are some challenges, the technical committee will seek to address those challenges.
This evening, Ghana's oil production is set to record a boost in 2026 as Cosmos Energy, operator of the Jubilee field, has reported a successful drilling of a new well. This means that the new producer, well named J74, is expected to increase output by about 18.6%, one of the strongest short-term production jumps in recent years. Now, it is worth noting that the increase comes at a time when Ghana's overall oil production has been gradually declining, making the new well an important relief for the sector. However, it is expected that the financial impact may be softened by persistently low global oil prices. Dr. Yusuf Suleimana is the technical advisor at the Ministry of Energy and Green Transition.
It's a great thing. What we need to do is just to work towards closely with our partners, understand each other, like what is currently happening, and I think it will continue. I believe it's going to continue, the understanding between the ministry led by Dr. John Jinapo, and that close and seamless relationship with our upstream partners, Talo, ENI. That relationship is beginning to yield massive results, and that's what we are seeing. So I want to say that there are better times ahead with respect to our production portfolio. And if we can get our upstream right, that will be in a better position to support our revenue flows and even support our downstream in a way. We have always advocated for a seamless linkage between the upstream and then the downstream. where these individual value streams can support each other. And that's what we're beginning to do. That's what we're beginning to realize at this moment in time. And I think we can always pat ourselves in the back and hope for better days ahead. But clearly, I think it's the beginning of the realization of the robust foundation that was laid in 2025. The enabling environment that was created in 2025 and still being maintained is what is bearing fruits in the pledge to drill more wells.
This is still prime business. Ghana's small retail businesses are feeling the squeeze as higher costs meet shrinking consumer spending. From Malamata to Nima Junction, traders say January sales have slowed sharply after Christmas, with many customers buying less, delaying payments or cutting back altogether. Rosela Calistego has more in this report.
Across several markets in Accra, traders say there's simply no money in the system. Even as prices of goods rise due to transport and utility costs, customer spending has failed to keep pace, forcing businesses to rethink how they price and sell. At Malata, beverage traders Maridi and Al Hassan say demand has dropped significantly despite pricing adjustments aimed at attracting bulk buyers.
For now, it's very slow. It's not like the way we used to know it. We are mainly on wholesale, only wholesale. We don't do retail. So because of that, people are patronizing because of the price. I think the government should let money flow in the country, as the others are complaining that they don't pay them. Like the workers, some of the workers are complaining they don't pay them.
It's been very, very bad as compared to the previous years. Since it's not been coming. This festive season is so somehow better than the previous, like the normal days. But we think maybe it's the economic, like there's no money. People are complaining that there's no money in the system. Really. It's the same prices we used to sell, but the petrol keep declining. So we just hope that maybe in the future things will maybe change.
The slowdown is also affecting local government revenue collection. According to Amos, a revenue collector at Malata, traders are struggling to meet their daily obligations on time.
The market is slow, so at times I go around for the money. They find it difficult to pay for me, but usually they pay. But they don't pay it on time. Things will change because some of them have travel, so usually they will come. They can reach the market to rise again.
For Doris, January is a familiar dry season. With many households still using items bought during Christmas, customer visits have reduced, forcing sellers to rely on personal relationships to stay afloat.
As compared to the Christmas, I can say it was better done this time. And because people buy their things already and now they are using it in the house, so maybe they will come after some time. But as I've been calling my customers and asking them, some of them, if I call them, they will ask you to bring some. Some of them, if you call them, they will say they have some, so if they need that, they will call you.
Food sellers are dealing with a different challenge. Mercy, who sells kelewele, say plantain scarcity caused by galamsey has made pricing difficult even during the planting season.
Nibiana season or your Yamadan season. Shamadan ba edaka keshipon fite.
Even though it is plantain season, plantain is still scarce because farmlands have been destroyed by galamsey. Customers assume plantain is available and expect more than their money. Some people come with 5 cedis and expect a large portion, which is no longer possible. When I go to buy plantain, I still get the same small quantity as during the off-season. This makes business difficult because plantain is expensive and selling cheaply would lead to losses.
Kifuna kabe wonu ohon ne wombo nyomo ka oba no ba he ne ekun baby anoshka e share benasa no ohele.
As traders navigate rising costs, weak demand, and post-Christmas fatigue, many say survival now depends on price flexibility, customer loyalty, and hope for an economic rebound. Rosla Calistego's report for Joy Business, read to you.
Let's now go to the commodities market. And now, the currency update. Thanks so much for watching Prime Business. I am Pius Kojobaka. Let's connect same time tomorrow. Prime Source is next.